Good day, everyone. All right, let me get this link shared out. And we are going to get started. Hope you're all doing well. Bit of a fun title there. Just to short here, I'm going to explain everything. That I'm looking at. Just posting on Twitter. All right, we're gonna cover some really important concepts here. A lot to go over. Just give everyone a few minutes to get in here. No hurry. I've taken some stops on shorts. I'm going to explain those ideas as well, and why I'm shorting up above, and what trading is. So a lot of people will say, well, I actually pulled some comments here, or did I? Let me find this comment. Okay, we're gonna start with this. I got this comment yesterday. Your bearish tweets make me sick. Kind of a funny idea, but let me just say something. I'm not tweeting bearishly. I'm tweeting that I want to short, right? Why do I want to short? So we're going to go over a few different ideas. One thing I just want to say is you get super used to these comments. When I shorted 73,000 here, I could pull up a million examples looking for a move down to 60K. The kind of comments are all, we ain't breaking down, sir. We're going up to 74K, maybe down from there. Follow the trend. Give up already. Shut up. You're an idiot. Haha, clown. Some people agree. Just stop, dude. Too bearish, so annoying, those types of comments, right? So people get really offended when you have an idea that goes up against their ideas. But here's one we're gonna go over. I've been planning to short this level from down here, and so we're gonna actually go over what the basic trading plan I've been following for myself is, the levels of interest that I want to be trading, and why I don't care if I take losses on some of my trades, and we're gonna go over some of the basics of trading, but let's go over to the Discord. All right, so this is what I want to start with. Actually, I'm gonna start with the current idea. So this is on the 1st of the month, 19 days ago. We're gonna go over a couple things. My target has been 42K. For a long time, actually from down here, but I was actually looking for a move up, looking to short down from the POC back into new lows, looking to long at 50,000 back into another high. We're going to look at all of that. The thing is, what people are always doing, like when I'm posting on Twitter, is they're reacting to the current state of price. They have no vision for the levels ahead. So this is what I'm going to explain quickly. We're going to go through a couple posts. I'm looking at the daily chart here, this is 19 days ago, to take these lows, maybe come up and put in a high at the level that we're claiming now, but ultimately to short into the point of control above the 65,000 high. Looking at two scenarios here, taking this liquidity or taking this liquidity. This is 19 days ago. We're going to put this on the live chart in a moment. But I want to just make an example here. This is back 19 days ago. What am I looking at? I'm saying it doesn't have to be this exact price action, but the levels I want to trade here, again, on the daily chart, is just taking the liquidity under this daily candle, running up into this 61,300 high, the high that I was talking about yesterday, maybe shorting that back down into these lows, ultimately pushing back up into the point of control at 67,000 and then shorting that. So even when price is down at 57K, I'm looking for this liquidity to get taken. I'm looking for this, and I'm really planning ahead, not just expecting the 42K target to come, and we're going to see a theme of just the major levels I want to trade. And I'm basically mapping this out 3 weeks ahead of time. I drew this. This is the basic idea. We put in a higher low, right? We retest the range lows again. Maybe we put in this level. This is what I was just shorting that I got stopped out on. Maybe we form a range here. I like this as like a little local idea here. Maybe we break down. There's ideas there too, but I want to short this idea and then push up everyone bullish because we've gone lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. We fake out the higher high and then we nuke. That's been my plan from 3 weeks ago. So I just want to point this out is I'm trading levels. I have a few different scenarios and I'm using risk management. That's all it is. While we're here, I just want to point out a couple more things. This was when we were making the all-time high at 73,000. I'm looking for a corrective structure to form here. And I'm saying it's hard to say what is more likely or less likely at the top of an impulse and no structure, and just giving examples that we're looking for a correction here before a continuation as a more likely scenario. And we ended up getting, probably for me, the scenario I was least interested in, which was the just choppy range, right? All these lower highs, extended choppy range. That's the scenario we got. But I was just drawing this out. This is many months ago. This is just the high time frame channel. But you know, even back here, 73K, I shorted 73K at the time, targeting into these 60K lows. Everybody says I was an idiot, blah, blah, blah. Just pointing this out, even here, and we're going to put some of this on the chart in a second. Even here, back 3 months ago, I'm still looking for this push up into the point of control. I'm looking for this choppy continuation down into what level? 50K, right? Push up into the point of control, down into 50K, back up into these forming lower highs, ultimately seeing lower. This is 3 months ago. So anyways, the entire point here is this, where everybody else is being really emotional and reacting to my post as if this has literally been my high time frame trading plan from here. Push up into the point of control, take the 50K lows, get the reaction, put in a lower high. And even from here, I actually have those exact, let me put in this. So I have this, right? The higher high trap. I have it still on my chart. The idea of the higher high and the higher low. I drew this out like we just looked at in the Discord. This is just the exact same thing I had on my chart here, the higher low, the higher high trap, right? So yes, we did not get a rejection here, and I took a stop trying to trade this, right? Trying to trade this idea of this, right? Take this high, maybe come back down and form the range and then push up. We didn't get that. Does not mean I'm not interested in trading this idea. You know, I actually could go back into this local trading plan. Let's just look at this. Let's just look at this. So we're going to get into some other important concepts here, but let's just compare this. This is the exact annotations. We're going to look at the from the day I posted it on the 1st. Take the liquidity below this candle into GP. Long first sweep and reclaim into GP, targeting where? This is, again, at 54,000. We end up coming down lower, but this is the idea, right? Come up and take this wick. Short first test into this local wick, a rejection of these highs, coming up and retesting these range. Trade it back down into these lows. We didn't get this part, but ultimately targeting back up into the point of control at 67,000 and then short that, right? So let's now pull up the chart. It's going to be a little easier to look on the daily chart here. All these annotations got kind of moved. take the liquidity, this is back on the first, take the liquidity below this candle into GP, long first sweep and reclaim, targeting up into these highs. This is the short that didn't work. Maybe come back, retest these lows, target up into this highs, put in the higher high trap and short it. Now, if this doesn't work, that's perfectly fine. I'm gonna take another stop, but I'm gonna trade this plan. This has been my higher time frame primary thesis, even back here to come in, reject from the point of control, rally off the 50K level, lower highs. Now I have this plan. And people will get angry that I'm just trading my plan. They'll get angry if my trades don't work. It's like there's no way to avoid that. You just, use risk management, have invalidation. Let's pull some of this off. So this should be kind of straightforward on why I'm interested in trading this point of control, because it's been part of my primary thesis for a while. And take a look at order flow, and I'm looking forward to trading this. I'm looking forward to trading it even if it doesn't work. Obviously, no one wants to short this. I mean, this is the break, and we might just blast through this, and obviously shorts aren't going to work in that case. But then you just take a stop loss, and I'm going to talk a little bit about that here, among some other things. I also wanted to cover interest rates. I'm not sure if the interest rate cuts and some of that, just for fun. I'm not sure if anyone's interested in that. But yeah, no one wants to short this. I mean, it's not hard to envision how hard it is going to be if you don't have a plan. If you're always reacting to, Bitcoin is really bearish here, Bitcoin's really bullish here, and you don't envision this ahead of time, it's really hard to imagine shorting here without a plan, right? And because I just know everyone's going to be bullish here. You can envision this whole idea before it happens. But for me, it's a really nice short idea to finish the last leg of this harmonic target down to 42K. So I'll be taking that short. What I want to talk about is this idea of, this is for basically beginners, risk management, losing trades. I want you to go research. Just go type into Google, what is a list of the best traders to ever live? The best traders to ever live. Who are considered the greatest traders to ever live? The best money managers to ever live. The best track records. Who have made the most money, billions and billions of dollars. Then go read what they have to say. Say quotes, one by one. Search them. Quotes by this trader, by this money manager, by this hedge fund manager about losing and risk management. And notice that not a single one of them is going to be saying something different. Okay? They're all going to be saying the exact same thing, and they'll say it's the most important thing. They all use almost all the same principles, not necessarily all the same strategies, and they have made the most money. Risk management is not a way to limit how much money you're going to make. It's the only way to make money. They all talk about how important it is to cut losers, right? And to yeah. So anyways, just go do that. If you don't understand these concepts, you'll never win as a trader. And trying to dunk on someone for losing a trade is so stupid, right? Dunk on somebody for using really poor risk management and going all in on a trade. There's no reason. And so watch the video that I have on my, there's also a really nice channel here, by the way, that I have pinned on my Twitter if you haven't. It's kind of a life-changing video for you if you don't understand risk management. So anyways, we're gonna be looking at this setup today. I'm interested in trading it. Let me read through some of the comments. Is everything working okay? No technical issues? If you're just tuning in, you should come back and watch the start of this live stream, because I just explained this whole plan here. And I'm not saying I didn't just take that I can predict everything that's going to happen, obviously, right? I don't know what's going to happen up here. I just like this setup. And I did just take stops on shorts, right? So obviously I can't predict everything that's going to happen. I'm trading levels, do my best to interpret the order flow. It's a bit of a channel here that's sort of interesting. This doesn't have to come immediately either. I mean, technically, and this would be a little unfortunate, because it sort of just puts us in a really awkward place. The whole thesis of like the range forming here and the front run that I discussed earlier, the reason I was shorting into this level, could kind of play out still, and it would be a little bit more annoying because it's kind of a hard short to find here. It would be really clean from here, and then you just look for lower highs and kind of have to chase that down with local setups. But for me, not shorting here. I tried a local setup here and took a stop on it. All right. Can I just get a show of hands in the chat? A show of hands in the chat, who wants me to go over the stock market interest rates? I went over it a little bit on Twitter, but it might maybe be more interesting on video. Or if you're just tired of hearing about interest rates. I don't really care about them, honestly. I just dove into it because people were saying stuff that made no sense. Someone's saying, are you expecting a wick as the higher high then and dump back to low 50s? It's not really, I mean, a wick would be nice. I would like a really high volume wick and an immediate rejection, just an absolute nuke, right? I want to say, I actually had the plan here of shorting a lower high at like the 72K high. I was just looking at some of my old tweets, like shorting 73K, shorting here, lower high, back into these lows, forming a range. I had some of that on my charts, and that's where my primary thesis is. It's just funny reading the comments on some of those at the time, like absolute clown, absolute idiot. You have no idea what you're doing. Just stop, just stop. Just stop's a really common one. It's just funny because it's like people get, and people, you know, it'd be nicer. It would be nicer, you could say, that if I had just said, oh, you know, not shorting anything here. I'm not trying to short any of this setup. I'm just looking for this fake out to happen and then shorting this down. But of course, trading intermediary levels, it's like when I was making some of my scalping updates, just scalping short into all of this, I could just wait for this, but I also want to take other trades and make money. Some of them will work, some of them won't, and trade some of the intermediary levels. So this has been my plan. And if I share this, like if I share this idea of like, oh, my plan's been to short the fake out of a higher high here into this point of control, people will say, lol, you just shorted yesterday and got stopped out. You're just shorting every rally. But it's kind of hard to explain to idiots how you could be taking a short here well this was your plan, and yeah, you got stopped out of the short here, and we're just running up to the point of control. But anyways, I like it. Personally, I like it. Yeah, so I posted yesterday that kind of my general plan. Hold on, I'm just getting some messages I have to respond to. One moment. Yes, Svaz says, I joined the Discord recently and currently going through learning, but I can already tell that joining your Discord was one of the best decisions to actually really learn and improve. Forever thankful. Yeah, I mean, go through the Discord testimonials, and it's a great community. It's a great place to learn how to trade. So let's look at the stock market here. First, we're going to just look at interest rates. This is the weekly chart on interest rates since 1972. The whole thesis is that interest rate cuts are bullish. That's what everybody says, right? Like, interest rate cuts are bullish. Understand that interest rates and interest rate cuts come in cycles, right? So interest rates increasing, interest rates decreasing. So this is like the top of or bottom of an increase cycle, top of a decrease cycle, and we're just looking at interest rates here. We can see sometimes small rate cuts or hikes come, or continued rate cuts or rate hikes come, but they're in cycles. So would we consider, for example, this here in 79, a rate cut cycle? No, right? This isn't the beginning of a rate cut cycle. There might have been a small rate cut here, but it's not the start of a rate cut cycle. All right. So let's go over to, and so this is where, what annoyed me is the things people were saying just weren't true about interest rate cuts and their correlation to the stock market. And then they were telling me not to cherry pick the data. So let's just look at what's cherry picked here, okay? So what we're gonna do is we're gonna overlay interest rates over the stock market, and we're just going to go through some of these examples. So again, this is just showing the example. These are just rate cuts. We just looked at this, but this is just showing this is rate cut cycles rather than just looking at individual rate cuts, the start of cycles, and maybe are we starting another rate cut cycle here. The really popular thing that was going around was Post by Zero Hedge, just showing some of the odds of, what happened after historical rate cuts. This is very misleading, and I said this at the time, but I don't think his goal was to mislead anyone. It's just, if you just, it gives like the wrong impression. Everyone's citing it to me, but you wonder if they've actually gone and looked at how the market responded to rate cuts. So we're back on the weekly chart. We're going to go back to 1972. We'll do it quick because I did it all on Twitter already. If you're interested, you can go read through my feed. But this starts in 1984. But let's go back to 1974. We cut out some important years. So here, it's not to say that my case isn't that every time there's a rate cut cycle that it's a bear market, but let's just note rate cuts starting here. They increase a little bit here, and then rate cuts continue here, right? So week after week after rate cuts, market down, rate cuts continue here, and then as the rate cut cycle ends, and this was a small one, price starts rebounding, ranging into some rate cuts. Ultimately, it starts to trend into rate cut hikes. Here we have a lot of crazy stuff going on. We haven't got to where the chart starts here, but again, the big rate hike cuts here. Rate hikes, and then rate cut cycle starts here, right at the top of the market, decreasing in 1981. The market is trending down for years, and it starts bouncing at the bottom of the rate cut cycle. And this is where this chart starts, 1984. And it's claiming that we have a bull trend starting into the first rate cut in in 1984, but it's clearly the bottom of a rate cut cycle. That prices come down here, and this small rate cut, yes, it's, or not the bottom, but it's like the bottom end of a rate cut cycle. And yes, price starts rallying into some rate cuts here, but at the top of the rate cut cycle, we entered a bear trend and started rallying here, continued higher into the next level. And I'm not saying the market's never rallied during rate cuts. I'm just saying it's not as clear cut as it's presented. So we have the next one is 1987, that we had a bull trend after 1987 rate cuts. These rate cuts were a response to one of the biggest market crashes in history, where we crashed, and this is going to be the same with COVID, and rate cuts came as a response to this. Do we think that the rally that came after these rate cuts had anything to do with this massive liquidity wipe and some other economic factors, rather than just that there were some rate cuts here? So it's just, again, if we're cherry picking data, people are using the rate cuts, you know, in July 2019, this is a really funny one. And here to say, look, we had a bull trend after rate cuts, not making note of the fact that we had a market crash into those rate cuts, and then the market rallied. 1989, again, rate cuts here. This one's really misleading. So it says 1989, no recession. Was the SPX is higher after 3 months, it's higher after 9 months, and it's higher after 12 months, 17%, 9%, 9%. But what actually happened here into these rate cuts? The market ranged, and so the point is, if you pick individual dates, it gives the impression the market was trending. It was higher 3 months later, it was higher 6 months later, and even 12 months later, it was even higher. But what really happened is the market ranged. It went up, and if you pick a random time, yeah, it was higher 3 months, but then it was lower, higher, lower, higher, ranged, and made a new low, right? It made a new low over a year later before it continued rallying. So it's just saying that, you know, just to look at this data and say rate cuts equals bullish equals trend continuation. In this case, the market made a new low, it ranged, and it's just the date you pick can give the impression that market was trending up if all you're looking at is this. All right. So the next date here is 1995. This is another misleading one because it gives the impressions, like we have lots of little rate cuts and rate hikes, rate cuts and rate hikes. Gives the impression that the market was trending into rate cuts again. The market was trending very strongly into these rate cuts, but this is not the start of a rate cut cycle. We can pull this image, or maybe I've already, let me just get the sizing on this, or the scale on this correct, so it's a little more obvious. Well, I'm not going to be able to do it. There was a small rate cut here. The market was trending obviously into the big .com bubble. When the rate cut cycle started, which is here, is the top of the market. This is the rate cut, top of the market, massive bear market into rate cuts, massive bear market into rate cuts. The market starts bottoming as rate cuts stop and starts trending into rate increases. And then in 2007, the top of the market is the start of the rate cut cycle. So here, I don't consider 1995 with one small rate cut, this top of a rate cut cycle. Like, it's just disingenuous. There's small rate cuts and rate hikes all in here to call this, oh look, rate cuts, we had a rate cut and then the market trended up. The top of the cycle is obviously here. And then again, yeah, 2007 is the top of the market. Literally, the peak of top is the rate cuts and market trends down. Then another example here of where rate cuts have been bullish is COVID. So here's another time that the chart's misleading. July 2019, 3 months rate, the market's higher. 6 months, the market's higher. 12 months, the market's higher. But what the chart leaves out is that one of the biggest crashes in history happened between those random dates. So it's like here, it's saying rate cut started and 12 months later the market was trading higher. It doesn't tell you the story that you're holding through the COVID crash, and because 1 year later is here, it gives the impression the market was just trending up here, not that one of the biggest crashes, just like the other crash in 87, right? It gives the impression, it doesn't really tell you that the biggest market crash in history happened. And so then people say, look, and then the market started trending up after rate cuts. Do we think the COVID crash and everything that came after it has anything to do with what happened after these this kind of bullish rate difference between rate cuts like this into one of the biggest crashes in history and then the market trending afterwards? Or like, see, this rate cuts top of the market, market trending up, rate cuts at the top of the market, rate cuts after, and as a response to some of the biggest market crashes in history, yeah, we rebounded after some of those rate cuts. Here, rate cut cycle starting top of the market into an uptrend. So I'm just saying that it's kind of cherry-picked data to claim, to look at this as an indication of how bullish rate cuts are. So the question is now, are we at the top of a rate cut cycle, right? Is this the top of a rate cut cycle starting? Or is the market just going to keep trending up, right? And I'm not saying, the market has responded bullishly over the course of a few days after rate cut cycles start, up 1%, 2%, 3% before the top comes in and it eventually crashes. I'm not saying that we're going to crash here. I'm just saying, challenge your opinion, or sorry, your assumptions, and actually look at the data. I don't actually think there's a very good case here that rate cut cycles starting are bullish for the market. Okay, I'm gonna read through some comments here. Okay, so the other thing is, and I may be wrong here, obviously. China has been in this is a weekly chart, this big weekly parallel channel. The lows, the highs, some nice horizontal structures, currently at the 618 of the move. I like the idea of the Chinese economy rebounding off support and the US economy seeing pullback. So anyways, that's kind of my view at this point. What I'm trading around, always using risk management. Some ideas work, some don't. All right. Let me read through some comments in the chat. Well, someone's saying, can you share altcoins consolidate or pull back with Bitcoin? Well, what do you think is going to happen to the average? I'm going to challenge a couple things here, assumptions. What do you think is going to happen to the average altcoin if Bitcoin goes to 42K? It's going to nuke to like zero, right? The average altcoin. Some may not. There's probably going to be some outliers. There might be some that even rally against Bitcoin. But the important thing is, you said when Bitcoin tops here. We do not know that Bitcoin is going to top here. There's nothing wrong with having some bullish ideas as well. There's nothing wrong about trading towards some bullish ideas. What people get really caught up on is, like, say I have this idea on Bitcoin, but I'm bullish on XRP. And I've had the idea of, I had the idea of longing into this multi-year POC on XRP, targeting towards new all-time highs. And people will say, well, why are you longing XRP here? Because your macro thesis is, your primary thesis is 42K on Bitcoin. Won't that send XRP lower? I don't pretend I know what's going to happen. I can have a bullish thesis, trading support on XRP. Maybe the trade works, maybe it doesn't. Obviously there's opportunities to take some profits off these trades anyways. But why would I sit here and stare at this XRP chart where there's a really bullish thesis on XRP and say, I'm not going to long here because I know Bitcoin will go to 42K eventually and I'll get a chance to long XRP. No, I can trade levels on different assets I'm interested in, including Bitcoin. I can get longs on Bitcoin, even if it goes against my primary thesis, because the long setup makes sense. If you followed along in the public Discord, I did a scalping session. The channel's still there, you can go back, but go to the start of the session. I started off with longs on Bitcoin and ended with short scalping, and I'm still taking longs. I'm still looking for long setups, even though I have a macro or a higher time frame bearish. It's actually a macro bullish thesis because this ends really bullishly. It's a big bullish bat harmonic. I've talked about it enough. I won't keep talking about it. But anyways, the point is, we don't know what's going to happen. There's a lot of alts at important resistance right now. FTM at some important resistance. The log scale chart here, middle of the channel, GP. I have my macro targets or higher time frame targets for FTM, for example, are for price to come back down into these lows around 10 cents. So, and I shared a lot of that up here, obviously. So yeah, the lower high here could be interesting, taking all of these, faking out this breakout into the GP, the middle of the channel, and see continuation to the downside. I think obviously if Bitcoin goes to 42K, most alts are going to follow, not range. Some might, but that's the most probable outcome. But you don't need to guess, right? You're just taking trades with risk management. And so what people want to do, and this is why people get absolutely wrecked, especially in a range, where I'd be looking for my shorts up at resistance where people are getting angry at me, right? People are going to get angry for me shorting here, and my longs down at support. Everyone else is just surprised all the time. So here it's like they want to guess what price is going to do. They want to say, you know what, I was bearish down here, I shorted, but now I realize everyone is right. The rate cuts are so bullish and price is going to go to 100K, and so they're longing here. I'm not saying that there's no setup here that makes sense to long. You can do it, use risk management, structure your trade. If your thesis is 100K, there's a 12-hour trade for you. But the point for me is I'm just going to trade levels towards my primary thesis, and if my ideas don't work, then they don't work, and I move on to a new idea. I just use risk management. I'm not going all in on any of these trades. Lots of small bets, and just do that over and over again. Have big asymmetry to the trade. So if a trade pays you 5, 6, 7, 8, 9, 10 times more when you win than your losers cost you when you lose, even if you have a 50% win rate, you're going to be printing money. You just need to use risk management. Okay, let me read through a few more comments. From madness to Someone's saying, are the trades taken and the knowledge learned primarily just for leverage traders or for spot traders also? In the Discord, do you take leverage trades or spot trades also? So let's just be clear here. For me, leverage is not a tool to trade more money than I have. Do you think I'm taking my net worth and I'm putting it at 200x on to get liquidated on a trade that doesn't work? Leverage is a tool to limit the amount of exposure I have to an exchange. So when an FTX happens and an exchange collapses, or today there were some rumors about a hack at BingX, and my exchange goes under or gets investigated for fraud and all their assets frozen, whatever it is, or gets hacked, I don't lose my net worth. So I put a small amount of my funds at any given time on an exchange. I trade, I use leverage to represent the size for those individual trades I want to take. And then I remove funds or add funds as needed. What's the difference? And this is it's a beginner's question. It's a beginner's question, okay? So what is the difference between a leverage trade and a spot trade? Zero leverage, I lose the same amount of money. If my stop loss is 3%, it's about 3% away here, I lose 30 grand. Whether it's 1x leverage or 10x leverage, it doesn't matter. Now people think spot. Let's use a long example. Let's just say okay, let's just say I took this trade and I want to trade this as my setup, $1 million position. Again, my stop loss is about 3%, and I'm just targeting up to this POC. We're just creating a random position. So I long here, a $1 million position, spot. What happens if my stop loss gets hit? I lose the exact same amount of money as a $1 million position leveraged. I'm not using leverage to trade more money than I have. I'm using it to reduce the amount of money on the exchange, to reduce my exchange risk, and my stop gets hit. It's the same thing, right? Now, what people get confused at is they say, but spot trades, you don't need to use stop losses, right? Stop trades, you just chill. So if I open a $1 million position here and it's just a spot position and price does this, I just chill. I can just chill. I'm just gonna chill, right? That's how people look at it. They say, well, if I want to buy, Pepe up here, I'll just buy spot. I'm gonna buy $10 million of Pepe up here and be down $6 million. I'm just gonna chill. It's gonna go up eventually. That's not how I approach the markets, right? People think that everything eventually will go up, as if 95% of spot traders don't lose not just some money, all of their money. Okay? There's a reason that everybody, even those trading spot, the vast majority of quote unquote traders lose money because they don't understand the market. They don't understand that you can't just spot and chill without risk. You just don't realize your risk. You don't understand the risk. Okay? Yes, some people get lucky and they'll say, I held this coin, let's say XRP, let's say it never goes up to all-time highs. How many people are in from, $3 years and years and years ago, and they've just been spot and chill down to 20 cents, 80, 90% drawdowns? How many people, well, I know, for example, Hex, right? Let's go look at the Hex chart. How many people are quote unquote, one of probably the most hype projects that there's been for years. I'm just going to pull it up. I mean, I know personally, people that have their entire life savings, they remortgaged their home, they took out loans and debt, literally every last penny to their name is sitting in Hex, in spot. Do you think they're chilling? Price is down 99.999999%. Do you think they're chilling? Do you think this has never happened before in crypto and doesn't happen all the time? Do you understand why you need to learn how to manage your risk, regardless of if you're quote using dangerous leverage, which is a risk management tool, so you don't lose everything when FTX happens or if BingX got hacked today? You have to take responsibility for the decisions and that you're making and protecting your capital. Sorry, I'm getting a little annoyed actually just talking about this because people are so stupid. They're so stupid they don't perceive risk at all. They don't perceive risk buying Hex, putting their life savings in Hex. Of course it's going to go up. It's just going to go up forever. I'm going to mortgage my home. I'm going to borrow money from the bank, borrow money from my family. I'm going to put it all into Hex. This is my chance to finally make it. I'm just going to spot and chill. I'm not worried. It's going to go up. I'm not worried. And now they're sitting in here, their lives ruined. So next time you see spot and chill, think twice. All right. Someone's asking, why do you think 42K level is important? There's a lot going on there. So I'll just kind of go over it quickly. Ultimately, it's a big harmonic target. Let's find that. So when we rejected from this level, being the 886 of the low to high, you really need to start looking at this harmonic as being a real real possibility. So it's also, and there's confluence here, and there's some ideas of it completing our so the 886, okay, this is our harmonic target for A, B, C, D. Nice confluence into this 43K region at the 618, a hypothetical wave 2, wave 4, and it's a bullish harmonic. So that's one thing that's important to remember. It doesn't look bullish. Obviously, this price action will not appear bullish at the time. I've seen so many people say, if we ever go down to 42K, the bull market is over, crypto's done, Bitcoin's done. Why, right? Such a nice idea. Get everyone really bearish. Everyone will think it's over. Everyone that bought up here and maybe has been holding through all this, so depressed, excited with every rally, depressed at every pullback, but they're holding strong, will finally just give up, and they'll say, after all that, almost a year of ranging, holding through drawdowns, holding through pumps, holding through drawdowns, they finally give up, and then we just rally for our fifth wave. So anyways, it's just an idea, but we're looking at this 0.5, into the 886. As soon as this happens, you know, this has to become a very high priority thesis. I'm going to go back to something here. We're going to go back to 3 or 4 months ago in the Discord. Shared some of this on Twitter, obviously, too. As far as high time frame bearish ideas go, I'm prepared to trade retest of the POC for this harmonic, right? So this is back here, just looking for that move back up into the point of control for another lower high, looking for this harmonic idea. And then here, just saying, just because we have a 42K target, this is months ago again, 3 months ago, more than 3 months ago, or no, almost exactly 3 months ago. I'm not expecting price to go straight down to 42K. It can still long price, you know, down into this level, right? Up into the point of control, look for shorts there. Just saying it's going to take a while. Sweeping 50K, still a nice long setup. Maybe sweep 50K, push back up 64K, 65K, retest this trend line. I'm just giving an example here of just because there's a harmonic target 3 months ago at 42K does not mean we can't chop around, form lower highs. And listen to what I said here. I don't think there is too much here to put a lot of stock into yet, but I decided to share this. What I'm doing is simply visualizing what the timing of a channeling downtrend might look like, a channeling choppy downtrend, lower highs, lower lows, deep into these levels. I think it can be helpful just to mark out the key intersections and be aware of the major ideas within the context of a move like this. So I don't want necessarily everyone shorting the bottom of the range because there's a target at 42K. It's saying, hey, what if we just for months chop around here and channel down into those lows? And then I gave a bunch of examples from previous years of this is kind of where we are, right? Come down, push up into the point of control, still waiting, prices at 61K for that move up to the 67K region for a short, for a lower high, being patient, and then sharing some ideas on ETH here as well. So that's the significance of the 42K level for me, saying, hey, why not look for price to form a channeling structure? Why not push up into the point of control, down to 50K, and just lower highs, right? A lot of people will look at this as a higher high if we push up above this level. But of course, it's not really. I mean, it kind of looks like one, but it's still a lower high here. I like it. I like this idea a lot. And it may not work. It's all right. that's answering the reverse question. So I'm just asking about my fib settings. I'm not going to chart the Indian index Nifty. I might do it later, and I'll share in the Discord. Is there a chance that XRP goes to all-time high though, with ETF hype, real company behind it, etc.? Yeah, I mean, I'm right now. My current thesis is trading towards all-time high on XRP. My best advice for everybody here is, my best advice to everybody here is, do not trade if you aren't an experienced trader. How do you get experience? So this is what I want to, you don't have to join my Discord. You don't have to become a member, although I think it's a great place to learn and probably one of the best investments you'll make as a new trader, or even an experienced trader. There's tons of experienced traders in there, 10 years experience, that have said it's one of the best decisions they've made. Is, think of it like this. There's a really safe way to learn how to trade and a really unsafe way to learn how to trade. The unsafe way to learn how to trade is just to not understand, not accept the fact that the vast majority of people, 90% plus, are going to lose money, and a lot of it, if not all of it, as when they start trading. And the reason is there's so much stuff they don't understand that's not intuitive that they need to learn. They need to learn it. It's impossible. If there was a couple things that I was missing, it wouldn't be profitable. One of the big things is understanding how to size your trades appropriately. It's literally mathematically impossible to be profitable with any system until you understand that concept alone. If you don't understand how to size your trades appropriately, you will not make money as a trader over any large series of trades. It's a mathematical certainty. Go watch my video pinned to my Twitter if you don't understand. But so when you're at your most vulnerable, when you're almost guaranteed to lose money, what's a bad way to learn how to trade? By putting all your capital at risk trading when you know nothing and you're at your most vulnerable and you're exploring ideas. Now, what I suggest is people learn all those early lessons paper trading. Paper trading means trading with fake money. You will see it repeated so many times. I can't learn when I'm paper trading. I just don't take my trades seriously enough. I just don't care. Okay. Imagine somebody, and so they say, I need to have money at risk. I need to have money at risk or I can't learn anything. And so I'm going to address this. I think it's completely false and wrong, especially for beginners. The people that say that, well, don't care about their trades anyways. Majority of people who say something like that have never tracked any of their data, have never journaled, don't even plan out their trades, don't even have charts. So they're pretending that they need to be losing all this money to learn. Ooh, I won't do that again. I won't do that. They're not learning anything. If you take a brand new trader and they have a question, what's a stop loss? What's a stop loss? Do you think it's good advice to tell them, well, you gotta go trade with some real money to figure out what a stop loss is. You gotta go put some money at risk or you'll never learn. No, these are basics. How to size, risk management, structuring your trades appropriately. These are lessons you don't learn with real money. You don't need to learn with real money. You need to learn the basics. You need to take 20 trades, see what happens, structure them, see what your drawdowns are. Understand, okay, you're paper trading, you're trading with fake money, and you're free to explore all these different ideas. You're not afraid to take trades, and you should be afraid to take trades as a beginner. You have no idea what's going to happen. Any confidence you have is misplaced. So go and take a bunch of trades, explore different things, and do it in a controlled, comfortable setting, which is paper trading. You don't have to worry. There's going to be plenty of opportunities in the future to trade with real money. Endless opportunities. Right now, you're trying to learn. Once you have the basics down, you're gonna try a bunch of stuff, and you're gonna say, oh, whoa, that didn't work. Oh, whoa, I definitely didn't understand that concept. Well, I'm glad I wasn't doing that with real money. You're going to say that over and over. I'm glad I wasn't doing that with real money. I'm glad I wasn't doing that with real money. And eventually you're going to start, it's just like anything. Is, if you want to make it a game, you learn the rules of the game, you practice the game, and then you get good at the game. So you learn the rules of trading, you practice, and you get good. Eventually, you'll start stringing together some nice wins. You'll have some losses, you'll have some wins. Your wins are going to be bigger than your losses, and you'll notice that your account is going to start growing. Your paper trading account. You'll go from having no idea what you're doing to being consistently profitable. Then you might say, you know what? I am going to go trade with a little bit of money. And you won't need anyone to tell you how much should I risk on every trade? That's such a common question. Hey, I'm just wondering, I'm going to scalp. How much should I be risking on each trade? $0. $0. How are you going to go make money scalping? You've never done it before. How much money should you be risking? $0. How does that not make sense? How can you want to trade with meaningful money when you have to ask somebody else how much money you should be risking? So anyways, the point is, you're paper trading. You have your own data. You'll say, you know what? I've figured some of this out. I've just taken my last 25 trades. I made some mistakes. I learned some lessons. I understand how to size my trades. I know how to cut my losses. I know what the expectancy of this type of trading might be over the course of 25, 30 trades. Now I'm going to try it with a little bit of real money. And you're not asking somebody, how much should I risk? You're saying, I'm going to throw in $50 and I'm going to split that up over my next 25 trades. Or I'm going to throw in $100 and I'm going to risk 1% per trade. I'm going to risk $1 per trade, targeting 5R. So I'm going to risk $1 to make $5 on each trade. I'm going to take 25 trades and see how that goes. And maybe you get to the end of that and you say, oh, whoa, that was a little harder with live funds. Once there was a little money on the line, I started thinking, well, what if I risk 10%? Then I could actually, make a little bit of extra money. You start making some errors and you start realizing, okay, there are some, now that I know what my goal is, I'm profitable paper trading. And I've seen what that, now I need to achieve that with live funds. And I put a little bit of money in there. And you know what? I did start making some unforced errors there, trying to trade with live funds. It was hard for me to keep my risk management intact because once there was money on the line, I wanted to make more. So you start working on some of those things, but you're not sitting there asking somebody how much can you risk per trade, because you've gone through all, for example, in the LATF, all the educational content. There is essentially everything you need there, and we like, for example, a story I love is one of the highest funded payouts for a certain prop firm. It was from an LATF member. It was a $70,000 payout or somewhere around there. I've shared the story. And he messaged me after getting the highest single payout in their history, and they tweeted about it too. And he said, literally struggling, had no confidence in his trading at all. And he was messaging me to say he credits his time in the LATF and everything he learned there with his success. He decided, fuck it, I'm not trading with live funds anymore. I'm just going to focus on learning. He went into the paper trading platform that I built, by the way. I mean, with a great developer, another who's also a member of the LATF, but I paid to get built and planned and whatever. A paper trading platform that's free to use. Okay, you can use it for free. It's called the Trading Arena. There's links for it throughout the Discord, tradingarena.io. But anyways, he went on to the Trading Arena and he just started paper trading, tracking everything, and he climbed to the top of the leaderboard. And he said, not having the stress or even the ability, there's only 2x leverage on there because you don't need to manage exchange risk on a paper trading platform, right? So it makes sense. We don't need high leverage. It's not a risk management tool at that point because all your capital's on the exchange. It's fake money. But there's only 2x leverage on there. And he said, not having the high leverage, just planning my trades, not having the stress of making money, I was just able to execute things exactly as I planned them. I didn't really care about making money. So I focused on trading my plans and managing my risk. And climbing to the top of the leaderboard gave me so much confidence in my trading. And just being able to put on a bunch of trades and execute what I was doing, then I went and passed a funded challenge right away after that, and then ended up getting the highest payout in the of $70,000 or something like that, or 67,000 or whatever it was. So that's a huge success story, and it kind of proves the idea here, right? The best place to learn is in a controlled environment, and the comparison I would use is it's like a surgeon. If you want to learn how to become a surgeon, the best place to learn how to perform surgery is not on a live patient. You don't need the adrenaline of someone's life in your hands to learn the basics. You do it on a dummy, you do it in a textbook. You learn a lot before you put somebody's life in your hands. Same thing with trading. There is a lot to learn before you need to have money at risk. There's no point in paying real dollars for those lessons. And just think of it this way, whatever amount of money you're trading with, you're going to lose it, okay? So if you're trading with $1 million as a beginner, if you're trading with $100 as a beginner, you're going to lose that money learning lessons that you don't need to lose it learning. So learn those lessons with paper trading. And I think one of the best investments that you could make is, it doesn't have to be in the my Discord, the LATF. It's going to be into some quality educational, like there's great books. Honestly, I don't think there's anything like the LATF. I can't even compare it to anything. There's nothing like it for a new trader. I mean, I don't know what's in every other Discord. I just know that nobody's doing what I'm doing, and it's just the fact that it's a Discord that kind of turns people off. Discord's just a place to organize information, but I do know from many members who say they've been in almost every other Discord. They've been in tons of other Discords or educational or signals groups. I'm not a signals group, although I share all my trades and ideas. It's not as a signal, it's as a supplement to the educational materials. And the reason I share them is, it's one thing for me to teach something in like, oh look, if we go look 7 months ago, this happened, that would have been a good trade. I'm showing the reality of trading. Me planning and taking my trades in a live market environment, implementing these concepts. It's a lot easier to see something in hindsight. So I'm putting, I guess, my money where my mouth is, and that's why I give all my live trading updates. It's not to be copied. I'm simply explaining the trades I'm taking and why I'm taking them. And I'm not suggesting anyone else takes them. And obviously I lose trades. I mean, I share my trade setup before I take it. I share my trade as I take it. And obviously, if you're a member in there, you know I take losses as well. If you follow me on Twitter, you know I take losses. So anyways, I digress. Learn how to trade before you start trading with meaningful funds. That should be so simple. And this is one last thing I'll say, and I've mentioned this a few times, so sorry for repeating myself to everybody who tunes into a lot of these live streams. People are so resistant. People want to throw their money away, light it on fire in the markets. They're so resistant to paying for anything that's educational, like reading a book. I think it's also they just don't want to take the time. Like they're really lazy about putting in any work. But like I had a guy who messaged me and said he'd lost $1 million trading as a beginner, and he decided he wanted to start taking trading a little more seriously, but he wasn't sure if the LATF was going to be a good fit for him. Would I let him try 1 month free? Dude, fuck off. I've given away tons of free memberships, but to people who literally can't afford them because, you know, they live, not to somebody who has lost $1 million, but doesn't know if they want to take trading seriously. They just don't know if the LATF is going to be a good fit or worth it for them. Could I give them a free month to see? Yeah, no. You can spend a little bit of money, go buy a book or something, buddy. But that's how, like, think about the mentality. That's so stupid. And so that's one thing that I like about the LATF is it filters out a lot of stupid people. Yeah, someone says, facts, wish I didn't spend 5K USD joining a stupid crypto group early February and spent the money on paying yearly memberships at the LATF for the next 5 years. Yeah. I mean, the other thing is, it's quite great value, I think, compared to everything else out there. And you literally won't find, I don't think, a community where someone's more active than I am and works harder than I do. But I'll say this: it's not a get rich quick scheme. If you're joining, you have to put in the work. I don't want to put anyone on blast here. That's not my point. I'm trying to think about, and I really do think, you know what? I'm going to talk about this because it's not about offending anybody. And I think this person, I'm not going to mention the person, I'm just going to talk about the kind of situation, I guess. I'll just go to a random channel. Lots of people from different countries here. I think this person really does want to improve that, but people are coming from different places, right? They've had different experiences. They've had terrible experiences. Some people are really beaten down by their experience trading, their time trading, and they've joined the LATF and they're just kind of looking for a new start, or maybe a last ditch effort, right? But what ends up happening is, this is actually a good segue. I'll read this after. What ends up happening is, people join the LATF. This is for some people. There's kind of two types of people that join. There's the people who just join looking for signals. They don't want to learn anything. They think just joining the LATF will make them a good trader. Like, they join, they pay a subscription, the day they're in, they're now going to be a profitable trader. That's not how it works. For example, if you don't understand something as basic as risk management, you're just going to lose trading any system. And then there's people that join to just dive into all of the educational content. Like, they want to learn as much as they can. They want to take the advice I give them, and so on and so forth. And everyone has their own reasons for whatever camp they fall into. But there's so many members who start off literally just, I'm not going to watch a single one of the educational videos, and I'll just go to the Discord really quickly. It's like this, right? There's all these different categories. You go through, you click on risk management, for example, and you have all this content on risk management. You click on scalping, you have content on scalping, profit taking, you have whatever it is, how to structure trades, probabilistic thinking. You just pick a topic and you go through it. There's also other stuff. But anyways, the point is, people can be really resistant to going through it. And there's people who join for 3 months, 4 months, 5 months, and they don't go through the content. They essentially refuse to. And then there's people who start going through it instantly. But I've had people that say, I've been here for 4 months. I never watched anything. I didn't want to watch anything. They were getting enough value out of just the live updates. That's all they cared about. That they were still stuck around. They still were a member, but they were not taking advantage of all of I call them alpha videos, but it's all these really powerful concepts that you have to understand to get the most out of your trading. And they finally go through it, and just it's game changing for them, right? And then there's the people who just dive straight into it, like it's like a 180-degree turn in their trading career from day one. 10 hours, 15 hours, 20 hours straight, just diving into all the educational content. So and just seeing massive results in their trading instantly. And so that's what I would encourage people to do. Okay, so this is what I asked. This is a while ago in the Discord. This is just to members. I said, I know this might be a question you don't want to answer, but I'm genuinely curious if you don't mind answering. I am sure at some point many of you have been interested in something like scalping lower time frames or trading different types of idea styles you've never traded before. How many of you have actually gone and paper traded a brand new style of trade, tracked your performance, and just tried to hone and develop that particular style or skill before moving to live funds? For example, a long time ago, I mentioned that I was taking thousands of paper trades, developing some scalping styles on the lowest time frame. I could take hundreds of trades a day. This was my lowest time frame scalping. A year ago, when I started trading this way, and I could only do it because of a certain exchange. I'm not going to get into all of that and the fee structure. I had an idea. I'm just trading with almost no funds, right? I'm trading with almost no funds. I'm like, hey, I think I can trade this really profitably. And I shared at the time a year ago, thousands of trades, hundreds of trades every day, refining that strategy before I'm going to real funds, because I don't know how I'm going to perform. I'm not assuming how I'm going to perform, and I test that data. I said, I am an experienced trader and still need to do that and see how I perform before putting more money at risk. So if I have an idea that I want to trade, I don't just start trading, putting all my capital at risk, trading this new idea that I have in my head. I'm going to start collecting data and honing that style of trading before I'm putting money at risk. And I'm an experienced trader, and I'm doing that. So the point is, why do you think you don't have to do that as a brand new trader? I said, how many of you are doing this? Paper trading definition can include small amounts of funds that are irrelevant to you. So it doesn't have to be paper trading, although I think it should be and could be, especially as a beginner. It could just be like $1 here, $1 there. So for people that do it a lot, 27 for not every member answers, obviously. I do a small amount of paper trading, journaling, 56. I start trading new concept styles and ideas without doing any personal testing, data collection. I have no idea how I perform before I start trading meaningful funds, is almost the majority of people. The majority fall between, I do small amounts and nothing, right? Which is one of the most important things you can do, especially as a beginner. I said, I won't wait for all of you to answer. You will obviously learn an insane amount that cannot be answered by me and understand what you're doing infinitely better if you have taken 500 low time frame scalps paper trading without the fear of losing money. Let's imagine you take 500 trades over the weekend, and I say very easy to do on low time frames, especially across multiple assets. Putting on 500 low time frame trades is not hard to do, right? I'm talking like scalping the absolute lowest time frames, something I demonstrated in a video. That's why I'm referencing it here. Do you think you're going to be scared taking your 501st trade on Monday when you have 500 trades of data behind you? Do you think you will have a better understanding of how to size and structure your trades based on things you experienced over the last 500 trades? Not things you watched in a video of mine, things you actually felt and experienced. Trading is a skill. Skills are things you develop. Develop the skill. Stop trying to figure out how to scalp the 15-second chart with meaningful money before you have taken a single trade. That is a complete lack of effort and responsibility. I would dare say there is a near 0% chance you will make it as a trader if you aren't willing to do this. Okay, so then I link. This is my paper trading platform. You can test and track on it to use it. There's other paper trading platforms, but this one has cool features and you can compete against other traders. If you don't like it, use TradingView's free paper trading platform. Use something. And then the next day, somebody messaged me and said, today was the first day I executed my own trading plans, paper trading only, before I had no confidence. I would usually copy other people's ideas. I took 13 trades today scalping Bitcoin, 3 losses, 2 break-evens, and 8 wins. I'm not getting cocky or saying that I figured it out, but this was the first time my own plans played out with a positive win rate. I'm continue paper testing this strat with proper risk management. Risk management was not a problem as it's all about logical decision making. I mean, that's also trading. It took me a while to figure it out. That's about it. Wanted to put a smile on your face with some positivity this morning. I said, hopefully the above inspire more of this. A DM from a member this morning. And I got quite a few other messages that were the same. So the point here is this. Why are you trying to trade? And there are many people who have and will. Your first trade ever, especially a certain concept, not just putting real money at risk, people will put their entire trading account at risk on their first trade. The first trade they've ever taken in their life, essentially, right? That's what people are doing, or their first scalp. Why not have a little bit of discipline, a little bit of personal responsibility, and a little bit of, honestly, I'll just say like brain, a little bit of a brain, and go practice with paper trading before you're putting funds at risk. So you know what? This is what I always say to people. Like people will say things like this, and I'm gonna end with this, but they'll say, "I'm gonna join the LATF. I want to make some money trading. Once I've made enough money to afford the yearly subscription or whatever it is, then I'm gonna join." They're not a profitable trader. They've never made money trading. They're saying, I'm going to make money trading before I learn how to make money trading. That makes no sense, right? It's like saying, I'm going to work for a few years as a surgeon, make some money, and then use the money I made to go to medical school and learn how to become a surgeon. So stop investing your money into the market before you've invested some money into learning how to trade, right? That's all I'll say. Go buy some books. Doesn't have to be the LATF. Like, for example, if you've invested and lost thousands of dollars in the market, but you've never invested $15 into a single book or taken the time to learn it, but you don't want to because you don't have that much capital, you realize that's stupid, right? You have to. It doesn't have to be the LATF. Like that, I'm sure many of you have gotten books that you've been suggested, right? Over and over again. Oh yeah, people keep suggesting this book or whatever it is. Go buy it. Go read it. Take the time to read it. Especially if you've lost tens of thousands, hundreds of thousands, or millions of dollars, as some of you have, or some people who messaged me have, and you still haven't taken almost a single step towards learning what you're doing, other than just lighting money on fire and calling it your tuition. Okay. A couple things. Seeking knowledge in the Discord is so empowering, to be honest. People are lazy these days because they think, I'm reading comments, they think they already know the basics but don't totally grasp it. Great platform that gives dedication, work, and time. Mark Douglas, all 4 parts, great to watch too. Agreed. Let's go over to the charts here, and we're getting a little bit of a local rejection. Yeah, so like here, so this is how I would approach this personally. Like people, I don't know what's going to happen here, clearly. There's no way to know because the market is essentially random. It's just a game of probabilities. At this point, I'm not so worried about what if we front run the point of control and I miss the trade. What I'll do is I'm just going to wait, and if this happens, and I can maybe look for a long setup down here up into the point of control. If this happens and I get another short setup on a local idea with bearish absorption, which I just tried, by the way, earlier today and it didn't work, then I'll take that setup with risk management. So I'm not going to, one of the worst mistakes you can make is taking a trade because you're afraid of missing another trade. So like let's just imagine, I'm gonna word it in such a way that I think is gonna make sense to everybody. Let's imagine you want to short this point of control up here, a rejection, maybe your trigger is a rejection back below this high. So you short this, and you think in your head, it's such a good setup. I want to short that setup so bad, right? I want price to go up there and reject so I can finally short it. You're waiting, and price starts doing this. And you start thinking, well, I don't want to miss this great setup, so I'm going to short here. That makes no sense, right? You've identified a good trading setup, and members in the Discord are going to be like, but you just took a short. Yeah, I did take a scalp short setup that didn't work, but I'm making a point. I'm not saying that there's not even a local setup here. There could be, right? This could be a local setup. I'm just making a point. And the point is, don't take a bad setup because you're afraid of missing a good setup. I know for a fact that should there be another trade setup to get short here, I have a very high chance of identifying it, maybe locking in some profits, carrying the rest lower, and just trading that new setup. So I can just keep an eye out for new setups. If we reject, most of the time there's lower highs and ideas to trade and whatever. So don't be afraid of missing. Don't take a bad trade because you're afraid of missing a good trade, is the way I'd phrase that. Doesn't mean you can't form new trades that are good trades. It just means if your only reason for taking a trade is because you're afraid you're going to miss a good trade, that's a bad reason to take a trade. Someone says, what is the possibility of a breakout? I mean, I wouldn't be able to tell you what the probability or possibility is. I'd say the possibility of a breakout gets a lot lower if price rejects below this high and never goes back above it. If price breaks out of the high and never comes back below it, then the probabilities are much higher, right? In that moment, if this happens, the probabilities of a breakout get a lot higher, and if price never comes back below this level, if price comes below this level and never gets back above it, the probabilities of a breakout are pretty low. If price starts getting back above the level, then the probabilities are higher. And that's why we use levels. How is price interacting with the key structures and levels? So there's no way to know with certainty. Levels are a good way to invalidate trades. You can always walk away from an idea and then come back to it if it starts looking good again. All right. I'm gonna sign off here. I hope you guys enjoyed this live stream. Yeah, I'm just checking one thing. I guess I'm just going to flip through a couple altcoin charts here that I just have here. I'm not saying that we're going to get these ideas, but I'm interested in them. I had the idea of sweeping this high. This is on the daily chart in CRV. Important levels here, you know, the GP, SR flip. This is kind of predictable price action. I think I drew this line up here, like the idea of bouncing, rejecting, whatever, and then coming down. I'm interested in this long. I don't know if I'll get it. Sweep this low. I don't know if this long will work. Down at 18 cents. The comments I was getting up here was that that's never going to happen. Maybe it looks a little more likely now. But if I get that, I'll take it. I talked about this idea on, I'm still actually in the short from ETH. I talked about this idea a long time ago when this wick low came. Just like simple SR flip, come fill the wick. Taking some daily highs now on ETH. Kind of a nice idea of rejecting like this. I'm interested in longing into this trend line, filling this wick into the GP of the low to the high. Was a nice important level. Come take a little bit more of this liquidity. I'm going to try that as a long setup. I'm not going to go too deep into this, but the idea here would be that imagine that Bitcoin crashes to the 42K target and ETH only comes down and fills this wick. ETH has been really weak against Bitcoin. This would be an early sign of strength out of Ethereum. And let me go show why that might be something worth keeping an eye on. So there's two ideas here. Where is this other? I guess I deleted it. So the one idea is that price starts bouncing off of this local channel when we're looking at the ETH/BTC. Let me just hide this. The ETH/BTC pairing. And we start seeing some strength out of ETH. So this could start to look like this even as ETH sees lower, fills that wick, Bitcoin sees 42K, we start to see ETH bouncing out of this downtrend on the daily chart first, and we see a much stronger rally out of ETH, out of filling this wick. So it was one of the reasons I'm really interested in longing ETH here, especially if we start seeing that. It's kind of complicated to explain everything there, but if we can come in and fill that wick, I'm quite interested in longing a sweep with tight validation, especially if it's when Bitcoin is hitting the 42K level and we're seeing relative strength out of ETH there. Link, I don't really think I have anything I want to share there. I've been talking about this idea on Pepe for a while. I kind of like this idea of just forming a range here. Whether or not we do, we will see. But signs of strength, holding that POC. Sol, I like the, we rejected from the GP once, we maybe will reject from it again or burn a lower high, but I like the idea of $78 coming, taking this low. INJ, still holding up this 14K low. I have a long from this sweep, took profits into, we had a 65% rally. You can go type in INJ in advanced search on my Twitter. Took profits here because we were rejecting from the GP. Yeah, coming back up into the GP. I don't really have any local plans here. I'm gonna swing long. That's it. I'm gonna look at FTM, or sorry, INJ as more price action develops, but I'm gonna swing long. I already went over FTM earlier. Say it's bouncing beautifully from the GP. I still have a swing long on Say, but I would like to see this all hold and another rally on Say. Some of the more bullish, like I have some bullish thesis and some bearish ones. Say I have a long on XRP. I've talked about a lot. I have swing longs on XRP. I do kind of imagine it's going to be difficult for price not to run these lows at this point. I mean, they may not. We may just get some strength, but I would be interested in adding off of this. Just very clean. Take this low. I think our GP is quite a bit lower. But yeah, I'll be looking very tight in validation add to my longs, taking this low on XRP, targeting back towards all-time highs. NVIDIA, I'm not really going to go into, but if you search NVIDIA on my Twitter, I basically got all of this price action perfectly from all-time highs. You know what? I want to actually talk about WIF really quickly, I want to get there before it's cool. So my thesis on WIF has been, I did have the idea for longing this SR flip, either the sweep of this low or this SR flip. It's not hard to imagine what this is going to look like. Let me just touch on it really quickly. So I posted this a long time ago, but I'm going to be looking to short WIF. It's not, this structure is just very clean. You can see this, like we have this horizontal structure. Price rallies, breaks up out of this trend line, up around $3. Everyone's going to be talking about this trend line breakout. I guarantee I'm going to post, I posted this back here. Every Twitter post a month from now, WIF breakout of massive trend line. Right into this horizontal resistance. It's very clear. We sweep that liquidity and we just form a range here. I'm going to be looking for a tight invalidation short up here around $3 on WIF, taking these highs, and we'll see if Twitter indeed is all talking about this breakout when the time comes. And then just trade this as a range. Okay. I appreciate everybody tuning in. Hope you got some value.